This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, anyone who's wanting to receive my premium signals as well as my daily market research and in-depth analysis, then please do not hesitate to scan this QR code on your screen. Let's start here though by looking at the S&P 500, and I also just want to start actually by saying apologies for not posting any videos yesterday as I usually do. It's just because I was traveling back from Amsterdam, so of course I was on flights. Here are the videos that I would have posted yesterday going into Monday's trading session. So we've seen the S&P 500 have a fantastic week. You know, we ended yesterday up around 0.44% and we're currently trading just shy of 4,000. Here's the problem though, I don't see a great argument for us to go higher. I look around right now, and I'm trying to digest the macro environment and looking at some of the technicals, etc. And then I also calculate the valuations of current stock prices, and the only catalyst for us to break above current levels and for us to trade higher, there's two if I had to put my fingers on them, and that'd be that earnings would have to be a lot better than expected. I just don't really see that being the case. I feel like the guidance is going to be very weak going forward, and it's going to take at least 6 to 12 months for us to understand that earnings have been a lot better than what was initially anticipated going into this new year. And the second, probably being the most important, is that the potential only catalyst for the market to trade high at current levels is because everyone right now is so bearish. And when you typically have 80% of people within a crowd leaning towards one sentiment, typically you do start to see the other one play out. So that's definitely a big risk in the market, that investors are incredibly underinvested at this moment in time, and any positivity that could potentially come out as a surprise in the coming weeks and months could see a surge in the purchase of shares, and hence you could see the market go higher. But if you're trading purely on the macroeconomics, you have to be worried here, and you have to start to look at this and think, this offers a fantastic selling opportunity. We're now pushing against that 200-day EMA. I was surprised that we broke out of this range actually towards the upside. I was definitely favouring a break towards the downside, but we have rallied at 50 points higher from 3,950 up to 4,000. And this truly is an area now where I do expect sellers to step back in and to send us lower here. So I definitely wouldn't be buying here. I would be looking to fade this rally. I think that in the coming weeks and months ahead, we are going to see some softness where we could see the S&P 500 fall back down to, let's say, 3,700, and that represents a 5.5% decrease from current levels. So that could be a very attractive entry point at current levels if it offers 5% to fall back down to where we were just trading at the start of this week.